Wow. Gold has surged to new all-time highs, but silver and platinum are on fire, and some of that fire is spreading to palladium as well. 6 weeks ago, on August 15th, I explained to you how a Fed rate cutting cycle could boost precious metals prices substantially, but I never expected that we get these many gains this much this fast. In the past 6 weeks, gold has gained 13%, silver 22%, platinum 18%, and now palladium is up 14% as well. In this gold market commentary for Friday, September 26, 2025, we'll take a look at the latest charts for gold and silver. We'll put the current market rallies into perspective with regard to what happened during COVID and during the great financial crisis. We're seeing precious metals on a tear, and we don't have any economic fear in the United States, which points to how this is a globally driven gold bull market. Hi, I'm Dana Samuelson, president of American Gold Exchange in Austin, Texas. If we can help you with any of your needs in the physical precious metals arena, we'd love to have that opportunity. This is a grid that shows gold's gains and losses in all currencies, major currencies, going back to 2010. And as you can see, we have not seen gold make these kind of gains absent a financial crisis in the United States before, which speaks to how broadly based this international bullion market for precious metals is. And I want you to pay particular attention to India, which is at the bottom on the right. And this year, while the US has gained 42.5% price appreciation in gold, while most other countries are a little bit lower because of the dollar's weakness. The dollar's down 10% against most other currencies, and that comes to play in this. India has even higher price appreciation. This is the world's most populous country that has a big precious metals culture, and gold is up almost 50% this year alone in Indian rupees after gaining 30% almost last year. Gold has been a safe haven place of choice for India over the last 3 or 4 years, and it's making a difference. I'll get to that a little bit later in our update. And the same thing applies for silver. We haven't seen these kind of gains for silver in the past, except for when there was a financial crisis in the United States or in the world. And again, while the US is almost the top of the chart as far as gains for silver this year at 55%. India, again, is at 61%. And cumulatively for the last 2 years, 86%. And this speaks to demand that's happening in India, the world's most populous country, which is why it matters in a globally driven precious metals bull market. Let's take a look at the latest charts and put these moves into perspective. This is the 1-year gold chart. You can see how gold made a big run going into the April tariff turmoil, then went sideways, and how I've labeled when we released our update on August 18th where the gold price was. It was 33.36 then. Just 4 days later, Chairman Powell gave his Jackson Hole, Wyoming speech where he indicated that the Fed was leaning towards a rate cutting cycle because of the dismal July jobs report. Well, I saw that coming. We saw a similar situation in 2019 when gold broke out, when the Fed started the rate cutting cycle. That's why I knew this could make a difference. And it certainly has. Gold front run those job cuts, Fed cuts, as you can see, more sharply than I'd realized. And it's gone all the way up to 37.66 as of the close 2 days ago in New York. Not today, Friday, September 26th. Let's take a look at the 6-month candlestick chart to get a little bit more graphic look at the individual moves. And here you go. Here is the 6-month candlestick chart that shows mostly the consolidation phase we've gone through after the big run in April and into May, and how gold had a rising bottom with a flat top. And then once Chairman Powell gave his Jackson Hole, Wyoming speech, gold has had mostly bids. And in fact, it's been pretty tentative along the way, but we had a $60 gain this week alone on Monday, which was really sharp. And then we had a correction on Wednesday, which I've labeled profit taking rotation. And we'll get into that in just a second. So gold went sideways after a big, big gain on Monday and Tuesday, after hitting a new all-time high intraday at 37.88. We had that, what I've labeled the profit-taking rotation question mark down day, and then the last 2 days we firmed back up again. And by profit-taking rotation, what I mean is investors who want to be in the precious metals sector. After gold's made big gains like it made in April, we saw a similar phase happen where gold went sideways, but silver, platinum, and palladium all made bigger moves, which means some of the money came out of gold but stayed in the precious metals sector and rotated into these other metals. And based on their price appreciation that we've seen in silver, platinum, and palladium for the last 3 trading sessions alone, I think that that's exactly what has happened. Let's take a look. Here's the 1-year silver chart, which again shows our update on the August 18th, and then Powell's speech, the dismal August jobs report, and then the Fed actually cutting, and then how silver has taken off in the last couple of trading sessions this week, moving sharply, sharply higher. Let's drill down again on the 6-month candlestick chart, and you can see how we've had rising trend, but not a breakout until a couple weeks ago. And we told you it was breaking out in our last update, which was 2 weeks ago. I was on vacation last week when the Fed cut rates, which were expected. And silver and gold actually sold off a little bit following the rate cut, but now we've taken off again. And what's very interesting to me is we've seen silver make a really big run in just the last 7 trading sessions, moving up more than $1 in 3 of them. And in 2 of these sessions, the moves started at 2 o'clock in the morning, New York time, which means when the London markets opened, which means it could be India buying that's helping to drive this market. If it's Asian buying, we might see that happen earlier in the evening, around 11 or 12 o'clock our time, when the Asian markets are open. India, of course, is Asia, but I think some of the Indian trading does take place in London. But nonetheless, we've seen big, big moves in silver, including a $1.50 move higher today, taking silver all the way up to 46.65 intraday, where it closed today at about 46.20 in New York. Now, remember, when these markets make big moves like this, we can see a profit-taking correction along the way, which is healthy. Doesn't mean the market's turning. It just means we're getting some steam coming out of it, which is a healthy thing to see happen. So we could get some bumpiness going ahead, but the trend is your friend, and the trend has been relentlessly higher, especially this week, which has just been incredible. Looking at the gold to silver ratio, silver's surge in particular has brought this ratio down compared to gold. It was about 85 to 1 the last time we talked. Now it's 81.5 to 1, and it's coming back into trend between 48 to 1 and 82.5 to 1, with the ratio tagged basis gold at 37.60 and silver at 46.10 earlier today. So the ratio is narrowing as silver plays catch up. If the ratio gets back into the mid 70s, which I think is entirely possible, and gold doesn't do anything, that could put silver into the low 50s, which would create a new all-time high for silver, which I think is entirely possible the way this market is shaping up. So it looks like we're going to see silver over $50 pretty soon here, and probably towards 55. Here's a 1-year platinum chart, which shows platinum has made a big couple of day gains as well just this week. And that's what I'm talking about, a rotation into other metals that are undervalued. I think platinum has been a beneficiary of that. But also with platinum, it is very popular for jewelry, both in Japan and China. and India. And we saw a big, big surge in platinum in May when we realized that there was a gigantic physical platinum delivery into China of 270,000 ounces, more than the NYMEX holds. We reported on that. For jewelry reasons, there was a huge surge in platinum buying. And that may be partially what's behind this big run in platinum right now. It's too soon to tell. We won't get the reporting on this possibility for a little bit more time, maybe a week or so, before we know in earnest what's actually happened. But that could be driving the platinum market so sharply higher. And platinum and silver and palladium are all thinner markets than gold overall, so they can be pushed around much more sharply. And that's exactly what we're seeing, as perhaps some of the money has come out of gold and moved into these markets over the last several trading sessions in particular. Here's the palladium chart that goes back 1 year. Palladium has yet to regain its high from July of 1337 after it broke out, but it made another big gain today as well and over this week. So metals are doing very, very well, uh, and they are literally on fire. It is amazing to see how strong the precious metals have been just this week alone. But again, when we get these kind of gains, you can see corrections. So if we get a dip, buy it. This market has been remarkably resilient, and the dips have been shallow and not long lived. This speaks to the global trend that we're seeing for precious metals. The blue line shows percentage of gold as a reserve asset around the world, and the red line shows foreign holders of US debt, which are primarily treasuries. And we've seen that gold has crossed over and is now a greater total asset hold than US treasuries are by foreigners. And this speaks to the global demand that has been happening for gold since the Russia invaded the Ukraine in 2022 and we weaponized the dollar, and central bank gold buying doubled. And now we're seeing gold buying by countries around the world increase individually by the people in the countries. And what we've also seen happen is gold has surpassed the euro as the world's second largest currency behind the dollar. Gold was number three, following the dollar, then the euro, and then gold. And now gold has surpassed the euro as the biggest currency, held second only to the dollar. And that is going to continue to increase as time passes. So this bodes well for this being a broad-based, internationally driven precious metals market. China is making moves to increase their dominance in the gold sphere, but they've got a long way to go. They recently reduced import and export restrictions for a couple of reasons, because they want to see gold flow more freely across their border. And they also want to use gold to help control the rise of the yuan, using gold as trading to keep the yuan from becoming too strong. Another thing that they've done is they want to court foreign reserve holdings of gold in the Shanghai Gold Exchange. This would be new purchases of gold by either central banks or other large foreign domestic gold holders. They want to store that gold for them. I would be a little nervous about that because of the lack of transparency in China, but they're making moves to grow the Shanghai Gold Exchange as a dominant force in physical gold in Asia for friendly countries over there. But as I said, they've got a long way to go. This is a graphic that shows, the LBMA on the left, the COMEX in the middle, and China on the right. The green bar shows central bank custody of gold. The orange bar shows commercial vaults, and the blue bar shows domestic government gold. So clearly, China holds their own gold, but they've got a long way to go to gain market share from commercial vaults and also from domestic government gold. So this shows you in proportion how China has got a long way to go to become dominant, but they're trying. And this speaks to a broad-based market as well. Let's take a look at India. India in particular has shown a surge in ETF buying for both gold and silver. This is a chart that shows gold flows into Indian ETFs, with the blue bar showing the last 4 months in particular. So after kind of a run earlier this year and then a pause, we're seeing renewed flows of gold into India at the highest price we've ever seen, suggesting that Indians are turning to precious metals in lieu of the rupee to hold assets, as many other foreign domestic investors are doing the same thing. And with regard to silver, it's even bigger. India's silver imports are gaining momentum from strong investment demand. This is a chart that I got off of X, courtesy of Tavi Costa and Bloomberg, that shows Indian silver imports are hitting record levels. And I do think that that's part of what's driving this gold market and silver market in particular so sharply higher. Our Indian ETF flows and Indian buying physically. They're the world's most populous country, and they do have a precious metals culture that goes back for generations. This shows silver ETF flows into India through August, and they've been quite sharp over the last 3 or 4 months. So I think that's helping to drive this silver price. In the physical arena, we have some specials. If you look at our homepage, amergold.com, and hold your cursor over hot deals, you can find the specials that we have. And right now we've got 3 of them. We've got French 20 franc roosters, a small cachet of them. These are internationally recognized trading size little gold coins. They're about 1/5 of an ounce or 0.1867 ounces per coin. It takes 5.36 of them to equal 1 ounce. They're internationally recognized. They're uncirculated, and we can offer them to you for as low as 3% over intrinsic gold value. Normally, they trade for 8, 9, 10% over intrinsic gold value. If you want a small, internationally recognized, trading sized vintage gold coin, these are a great deal at the current pricing while supplies last. We also have a small cachet of 1 ounce American silver eagles, backdates at 50 cents off per coin, which should be one of the lowest prices you'll find for US silver eagles in the country. And we continue to have a special on gem quality MS65 $20 St. Gaudens, pre 1933 20s, minted between 1907 and 1933. The total known survival rate in MS65 for all dates and mint marks is less than 300,000 total coins. So that's the potential supply. At any given point in time, there's a few hundred on the national market. Right now, we have these available at one of the lowest premiums we've ever seen for these coins over intrinsic gold content, just 10% over melt value, where their 10-year average premium is 37%. And that's with our $75 off per coin discount that we're offering right now to get that premium down to 10%. We want to make them as attractive as possible for you. If you want to own physical gold that has some leverage through scarcity at their lowest premium point ever relative to intrinsic content, this is one of them, the $20 St. Gaudens in MS65. So that's our update. Thank you so much for your time. If you like what we're doing, please subscribe to our channel. I try very hard to help get you ahead of the curve with these updates. And that's what I was able to do with my August 18th update by the time we released it. I taped it on the 15th that explained to you how lower rates could boost precious metals. I didn't think we'd go so far so fast, but yet here we are. And these markets are literally on fire right now. It's been an amazing week, especially for silver and platinum. And thank you to our loyal customers. Without your trust and support over the last 27 years, we wouldn't have a business, and we're grateful to you every single day. So thanks again. Have a great week out there.